Hello, everybody, and welcome to Extra Dividends. This is the program where your returns are more than just dividends, sometimes a lot more. And this is your weekend update for April 30, 2022. And I welcome you and all the new subscribers that have joined us. Well, this is the headline in the weekend edition of the Wall Street Journal. The Nasdaq caps the worst month since 2008. And that's not the end of the news, because the Dow Jones Industrial Average was down more than 9% since the beginning of the year, and the S&P is down 13% since the beginning of the year. So overall, April was the worst month for these indexes since the pandemic began. And as many of you know, this Extra Dividends program grew out of the hit that I personally took in March of 2020. And I have talked to a lot of you, and I know that your portfolios also took a pretty major hit at that time. So the question is this as bad as it gets? Well, nobody knows, but as investors and traders, we do know that we need to be prepared for whatever may happen. One of the gurus that I follow in the trading world said after Friday's close that Monday could be sheer chaos. Well, we don't know that, but it's possible. And the question is, how do we prepare for that? And Extra Dividends is one of the ways that we prepare for that. One of the most important things is understanding your risk. For sure, there's more risk in trading a market like this, because every time we put a trade on, there is risk. I like to look at it from a really simple standpoint. When you go out and buy stock, if you buy one share of stock, the price of that share of stock, it can go up or it can go down. You don't know. So that's risk. That stock, you can buy 100 shares, you can buy 1,000 shares. That stock can go to zero. Very, very rare, but it does, and it can happen. So there's always risk. And the market like it is right now, with the significant volatility, we have to understand that there is more risk. So what do we do to minimize risk? And the primary way we do that in Extra Dividends is by letting the market come to us. So if you look at the trades that we have on right now, pretty much in every case, when the trade was put on, the market had to move down to fill our position, which is why some of the times when you see the signals on Monday, they may not get filled till Tuesday or Wednesday. Sometimes we go the whole week and they don't get filled. And that's because we're putting the trade on at a price where the market has to move to come to us. So most of the time, the market has to move 20% by the expiration date on those that we do get filled before our break-even price is breached. And again, comparing that with when you buy a stock, you're at risk on day one that the stock could go down in price. And if it goes down $1, you lose $1. So what I want to do today is take a look at at how this plays out with the positions that we have on. I did this last week. I'm going to just go over it quickly again, because this week was a different week. With the markets down as substantially as they were, we want to see how our positions are holding up against that. So I'm just going to go down through them quickly. Camping World Holding is one, as you know, we've played many times, and you see that it is one of the, I think one of the 2 or 3 stocks in our portfolio that actually went up this week when everything else went down. So you see our strike price is way down here, and it has a ways to go before we breach that. DDD is an information technology stock, and the technology stocks got hammered this week. But with the strike price at $10, the DDD still trading at $11.34. We're in good shape on that one. As we are in Ford, a new position, Ford has to come down 20% before it breaches our strike price. Just going to run through these quite quickly. Goodyear Tire, this is one where last week we rolled because of the current price was right at our strike price. So we rolled it to another credit, and now Goodyear is actually trading above our break-even price. Break-even is at $12.90. Goodyear tires at $13.32. So we're in good shape on that one. Macy's is still a long ways to go. It's a fairly new position, but our strike price is $20. It's trading at $24. Marvel is another technology stock is still right on the button. The break-even price is $58.75, and you see it's trading at $58.08. So hopefully technology and Marvel doesn't get hammered too much. Otherwise, that's one that's going to maybe be an ouch for us. And the same is true of Micron Technology. It is holding up well. We're at our strike price is at $57.50. It has to come down a long ways before we breach that. And you can see in recent times for over a year, it hasn't been anywhere near $57.50. That one looks pretty safe. Norwegian Cruise Lines is doing well, and as is Overstock.com. Again, Overstock is another one that went up on Friday by 4%, so it's holding up well. Roblex is a communication services stock, and the break-even is at 24. It actually has to come down 20% from where it's at right now. It has come down a little bit since we put this on, but it still has to come down 20%. Sentinel One, $25 strike price, and it's trading at $33.83. WDC is another one that we rolled a week ago, and we took in more credit. Our break even is at $51.22. The price is currently trading at $53.07. So that one, it doesn't, it expires on May 20th. And Warby is another one that's on the bubble. Strike price at $22.50 is trading at $23.29. So overall, in a week where the stocks have come down dramatically, the indexes have, our stocks are still, for the most part, quite a ways off. And that shows the strength of having that margin when we put the trades on initially. I want to do something a little bit different that I haven't really done on our weekend updates before, but I wanted to show you where we might be at on Monday, because I know a lot of people are concerned. We didn't have any trades on last week, which turned out to be really good. We didn't have hardly anything on the week before. We didn't close any trades this past week. So let's take a look at the stocks that I'm looking at for this coming week. Now, this is where the stock closed on Friday. So before I put the signals out on Monday, we'll take a look. If it changes dramatically, some of these will change. But I'm looking at a strike price of $50 on Alcoa, and it's trading currently at $67.78. Also looking at American Airlines, the airline industry has done well. I think currently we don't have an airline in our portfolio. Most of the time we do. And look at this. The strike price is $13. It gives us a decent premium, and it's currently trading at $18.87. So First Majestic Silver Corporation, we took a loss in it, and I sold some calls. We're out of it right now. I'd like to get back in this. And yes, it's risky. You see it's come down a long ways, but look at this. It's not traded in the past year for under $9.50, and we can get a really decent premium on an $8 strike, which would require the AG to come down quite a ways yet. So A&F is Abercrombie and Fitch, and it has gone up quite a ways, and still to reach our strike price, it would have to come down 27%. So that would be quite a drop for that to get filled if we get back into that. This is one that I'm kind of looking at as a bonus trade, just because it's not a real well-known company, but they were trading at $140. It is a technology company, but I've done a little bit of research on this company. I really do like the company, and it has to come down to $15 from 26.80. And I will tell you, as I have written on the screen here, that's a 42% drop in price before we would lose money. And honestly, I wouldn't mind owning this stock at $15 because I think it has a really good potential in the future. So a really good premium is available on that one. General Motors, company everybody knows, a 31 strike, 37.91 currently trading at Las Vegas Sands. For those that have been in extra dividends for a while, you know that we have traded this one numerous times and need to move that. You see the strike price of $27 would get a good premium, and it has to come down over 20% for that to get hit. So that is what we wanted to take a look at for the upcoming week. And that does it for this edition of the Weekend Report. Again, if you're a new subscriber, I want to welcome you. And if you do have any questions, make sure you email me. My email address is here, jim@xtradividends.com. And if you are seeing this for the first time and you're not a subscriber, you can get information of that at our website as listed here, and watch for your new signals on Monday morning after the market opens. Usually I get those out between 7 and 7:30. That's it for this weekend. I hope you all have a wonderful weekend. And remember, have fun and be careful.